Hello and welcome to Insurance Business TV for our first property insurance power panel of 2026. We're going to take a look at the risks lithium-ion batteries present. They've moved from a niche hazard to a mainstream property exposure, and that's starting to show up in underwriting appetite and premiums. Our brokers are back. Melissa Jolly, Managing Director of Pinnacle Insurance Brokers in Perth, and Martin Birch, Principal of AgriInsurance in Sydney. And we're also joined by an underwriter in Sydney. Dominique Vagi is back. She's Chief Underwriting Officer with Hutch Underwriting. Thanks very much for all of you for coming on board today. Lithium-ion battery fires are quite often in the news as a factor and sometimes a cause of house fires when an e-scooter, an e-bike or a tradie's tools catch alight. What are your initial thoughts on this attention-grabbing risk, and how often are you actually seeing these in property damage claims, if at all? Martin, let's start with you on this one.
Well, hi, Danny. Firstly, welcome to Dominique and Melissa. I'm looking forward to what Dominique has to provide some input on, because I haven't seen this in my portfolio or had the experience of a claim. So my thoughts from a broker's perspective is as a relative newcomer to the topic, and it just struck me that there are a few basics that one has to understand. The first is that there are two types of battery chemistry involved with energy storage applications. Lithium iron phosphate, or LFP, is the safest and the most efficient of the two. The second point is that in the context of battery energy storage systems is to understand the term thermal runaway in lithium-ion batteries. It refers to an overheating of a battery cell, which leads to a chemical reaction that is a self-sustaining chain reaction where the internal temperature of a battery cell increases and the fire just rises uncontrollably. So it's a self-sustaining, reinforcing sort of upward spiral. And a lot of it has to do with the chemistry involved of the different batteries. And the third point is that these fires are different from ordinary property fires, that, the conventional buildings and contents type of fires, because there's a very fast escalation, a quick spread, that's the thermal runaway, and the battery cells vent highly flammable gas. That gas is toxic, and there is a robust propensity for reignition. So after the initial knockdown, these batteries apparently retain so-called hidden heat because damaged cells keep reacting chemically. That's why I emphasize the chemistry involved. So they tend to retain what is referred to as stranded energy or heat. So from my standpoint, the key takeaway, according to Finance Mutual, is that this is a non-standard fire problem.
Well, Martin, thanks for that rundown and thermal rundown and all the other stuff there. Melissa, turning to you, I suspect similar position to Martin. It's not something that's on your radar a lot, or if at all, yet?
It's definitely a newer space, and it's a lot more. We're finding a lot more about it in the media than I have, touch wood, in my own book over here. But we are finding that the media attention is well founded. In WA, in particular, obviously, I'm based over here, so I'll speak on behalf of WA. Lithium-ion batteries are the fastest growing home fire risk. Apparently, WA recorded 166 battery fires in 2024, which I certainly didn't know the numbers were that high, but that's very interesting. 166 have been recorded, which equates to about nearly one every second day. So by late 2025, so last year, that trend escalated, making it the state's worst period on record for battery-related property loss. So it's been very interesting researching our topic this time, because I haven't experienced it personally within my book, but yeah, there are a lot of fires going on here. We are also seeing a surge in total loss claims. So unlike a slow smouldering kitchen fire, as Martin was explaining there, battery thermal runaways, it's an explosive event. So some insurers have reported that claims involving these batteries are now frequently exceeding $500,000 due to the speed of the structural destruction.
Thanks, Melissa. So a lot of battery fires going on, Dominique, but I mean, are you seeing it coming up in claims, and what's your take on this risk?
It's certainly moved from a novel to a more regularly occurring risk in the market. And we have definitely seen across the market more claims in the space. Again, it's still quite new, it depends on your portfolio size and what areas of the market you're exposed to. So it's not something that we've had a huge exposure to. However, we definitely see it as an emerging risk in our space. So I know that Melissa's mentioned there the WA stats and what's been happening over there. In New South Wales, the battery-led fires doubled between 2022 and 2024. I can't remember the exact number, but I think it was somewhere around 360 battery-initiated fires in New South Wales in 2024, and that's obviously going to have only grown over time as well. I think that identifying that frequency is rising, but also that the severity is disproportionate. You can have a very small battery on charge and it can cause a significant problem. So I think that increasing in frequency and severity is really driven by the manufacturing variability, the user behavior, so where people are charging things with the wrong charges, mixing and matching their chargers and devices, and also modifying devices. There's also a challenge where you've got storage density and having a lot of batteries all in the same place being stored. And I have to say it was really interesting listening to Martin's research that he had done into the batteries, because my background prior to insurance was chemical engineering. So I love all the chemistry side of it. So thank you, Martin, for going into that. It was very nice to hear and not have wasted my degree. The other items that cause a challenge here is the charging location. So I'll talk about, I know you're talking about examples of losses. And while we haven't had any particular losses that I've been able to talk about, we have got data from the market and what's been happening and the kinds of losses that are a concern. So if you have an e-bike being stored in a hallway on a strata complex, for example, if there's been a bit of damage to the battery, that's one of the main causes is damage to batteries that then leads to catastrophic failure during charging. As Martin mentioned, there's a release of gases, there's toxic byproducts, and that fire intensity is significant. The temperatures reach like 900 degrees Celsius very quickly, and it's very hard to extinguish. Martin also mentioned that risk of reignition. It's a definite issue for the fire brigade coming and trying to tend to a fire, because that risk remains. Even if the fire is put out quickly, then there's still a significant amount of smoke damage and contamination that could impact multiple units. And the biggest issue with these charging in hallways, which seems to be quite common in strata, is actually the risk to egress. So, fire starts and then people can't get out of the apartment complex. That's a significant issue. And I'd also echo Melissa's comments about the costs of losses. Definitely, up to 500,000 is what we're seeing in the media, but a small device can easily cause a loss that's into the six figures.
Yeah, thanks, Dominique. So to sum up there, I mean, where do you see the most, I guess, desperate battery exposure concerns?
Yeah, my main concern on this is that it's not something that insurance is going to just be able to resolve. I think that the concerns really are around the consumer behavior. And that's going to, where we've got an increased use in batteries and battery operated products, we're going to see an increased frequency. And I think that's quite difficult to stop that without regulation and consumer education. If you think about last time you put something on charge in your house and, worried about the origins, Christmas comes around and your kids get remote controlled cars and you plug in those batteries. So, do I leave that one by itself? I think that's the kind of thing that, unless you have education of consumers, they're not going to change their behaviours. And as I mentioned, that's an ongoing risk to life as well as property. That's particularly from our portfolio. We're very strata driven, so that's where I spend a lot of time thinking about the exposures for us. But certainly in retail and warehousing as well, you have the added exposure of that bulk storage and charging. And that's when you get that thermal runaway propagation. One battery catches fire and the increased heat can set off the chemical reactions in another battery. And that's where you get that runaway across devices. And the typical traditional fire protection just isn't designed for the fuel loads and the temperatures that you see from battery fires. So I think it's important that standards need to be reviewed. And in my research heading into today, there certainly is work on those standards already, but I'm not sure that anything's been agreed upon. But then, of course, mentioning again those increased costs. I think it was in the media recently, I think it was IAG that had identified that the average cost of a fire was $87,000 for a traditional fire, but a battery-led fire is likely to average around $250,000. So it's a significant increase, and that's something that we absolutely have to monitor the cost and frequency.
Turning this back to our brokers who've also been doing their research, which is much appreciated. In your property portfolios, is it possible to kind of suggest where you see the most serious battery exposure concerns right now? Martin, let's start with you.
Yeah, sure. I would expect most of the battery exposure would be in the residential market. But you can quickly see how this extends into the commercial and industrial property market. I was struck by something Dominique said there. If you consider a client who owns a block of apartments, a block of flats, and she spoke about egress, people being able to get out of a building. I quickly started thinking about, oh, wow, there's a liability exposure right there. So this is really, really interesting. I'll talk more about liability just at the end of this, my sort of input here. So it seems the hazards can be linked with the energy storage system in place at a premise together with the battery management system. So from a broker standpoint, I see 2 points of interest there. The first point, from what I can gather, is that it seems most battery management systems in the Australian lithium iron phosphate or battery market typically include smart devices connected to the internet. So those IoT-enabled systems allow for remote monitoring, obviously, for risks such as overheating and overcharging. And so it's quite easy to see that you need robust cybersecurity controls incorporated into the larger risk management system at the property. The second point is that a client's energy storage systems should ideally be part of any broader risk management plan. And here we go again with my other thing on risk management, or property protection systems at a premise. So so first of all, the points are that you'd want to use approved devices that are connected to the internet because they prevent or detect or control this thermal runaway. And they are generally found within the battery management system. So it wasn't surprising to me to learn about new mandatory cybersecurity standards that Dominique mentioned. My understanding is that they are already done and dusted, and they're effective on March 26. It's a technical standard. I think I wrote it down here. The Electrical Energy Storage Equipment Safety Requirements, TS 5398 or 25. But anyway, so whether it's in or it's coming, and the idea behind that is to prevent cyber-induced failure, not only to the energy storage systems on premise of our client, the owner of a block of apartments, but perhaps more relevantly, from a regulatory standpoint, exposure to the electricity grid, which begs the question of liability that attaches to a fire of an e-scooter in a residential apartment building that spreads uncontrollably. So it's a really interesting topic. That's my point.
Yeah, certainly very complicated. Melissa, looking at your property portfolio, is it possible to put a finger on where you see the dangers of the most exposures?
Yeah, I've narrowed it down to kind of three main areas. The first one, I am echoing both what Martin and Dominique have mentioned there. So it's the strata or the high density residential. So e-mobility devices such as scooters and bikes that are charged in hallways. It sounds like a common theme between the three of us, or even balconies. So one failure can displace an entire building and trigger massive liability claims. So I won't go into that further because the other two have covered that a lot. Retail and warehousing. So it could be high density stockpiling of these batteries. They could be damaged or uncertified, like grey market imports sitting in bulk. you could deem that to be, a fuel load waiting for a trigger. So they're just sitting there waiting before they're shipped off to their next location. It could be a big catastrophe there. The third one is commercial and trades. So job sites where there are multiple high capacity tool batteries that are being fast charged overnight. So no one's around there to monitor them. They don't have any thermal monitoring or fire-related cabinets. And again, they're just sitting there and something could happen overnight, spark it, and no one's around to look after them.
Thanks, Melissa. Dominique, a question just for you. Are batteries something you assess separately as a risk when you're looking at, your property insurance offerings, or have you changed the way you underwrite this sort of risk in the last year or so?
I think the market's still very much in the gathering data phase of this. It's still an emerging risk. And I think that, insurers are still working through the controls and the risk management approaches. And I know Martin mentioned risk management there, and I'll mention it a few times before I finish as well. But controls that you can put in place, like asking questions around, battery use and storage, it's very difficult for a lot or building owner to confirm their tenant behaviour. So you can ask a question, but it is still very difficult to get a real picture of the exposure and the risk at a particular site. And that works across both resi and commercial risks. And I think that's something that where you're talking about resi or commercial strata, it's something that could be managed by the bylaws of the building. So, encouraging that risk mitigation, where something should be charged and stored, the supervision, switching things off at night, alluding to Melissa's point there about unsupervised charging overnight, aggregation and bulk storage rules. So if you're going to have an area of a building, maybe it's in the basement where everyone charges their e-bikes, that's then an aggregation risk as well. And you've got that high risk of them will run away across multiple devices. And that's something that, we already see dealt with in the storing of flammable liquids, in contracts and in bylaws within strata. And that's something that the industry as a general, not the insurance industry, could consider driving towards. These things can be put in place as part of policy conditions, insurance policy conditions, but it's really hard to drive that behaviour shift. And I think that where you have a lot of people might understand that there is a risk associated with battery charging, they'll still use unsafe charging practices. People will still go for the path of least resistance. So I really think there that insurance alone is not the solution. It really does need regulatory change. Martin mentioned there about cyber regulatory. It's not an area that I had considered. I'll put my hands up on that, but I'm definitely thinking more about your residential batteries that are less likely to cause a systemic problem. But absolutely, when you think about industrial battery storage, cyber's definitely something to think about there. But the other regulatory changes that need to be considered are your fire suppression and protection, and even just regulation on the manufacture and import of these devices to make sure that we are only putting things in our homes and in our businesses that we have a good handle on the risk associated. Certainly the preference for all insureds would be to avoid the loss, and that really has to come from risk management primarily.
Bringing this back to customers for our final question, you've all kind of delved into this a bit about customers and their behaviour and how they're storing these batteries, what they're doing. But when you're actually arranging the property insurance with your customers, Melissa and Martin, is battery exposure something that comes up from clients much? Should it be more of a discussion point, do you think? Melissa, can we start with you on that one?
Sure. So this risk, lithium-ion batteries, it is becoming more and more prevalent in the media, and we're hearing stories about it. So it is rapidly moving from an under-the-radar kind of situation to more of a mandatory disclosure point. And this is where it becomes a little bit nervous as a broker of that non-disclosure on behalf of our clients. If a property is owner-occupied, whether that's residential or commercial, most of the time they're very aware of everything that's going on in the building. But as Dominique mentioned there, if it's a landlord situation, if they've got tenants coming and going, every time knowing, what their tenants are doing, that's where it becomes a little tricky. So, in 2026, where we are now, we can't just ask about the basic fire protection. It is something we are going to have to start asking that question about charging hygiene, and whether insurers are going to start putting those questions on, whether it's the proposal forms or the questions, the broker platforms that we have to fill out all the questions, whether those will start being mandatory questions that we have to answer. So watch this space. But yeah, it becomes a bit of a non-disclosure risk or an increase in hazard if we're not declaring these things. And we need to communicate that to our clients, saying they do need to be more diligent. Again, if they're a landlord, what are they doing to make sure their tenants are either installing these devices correctly, or if there's that bulk storage that we've spoken about, what additional fire protection are they putting in place for that?
And Martin, what about you? Is it much of a discussion point with any of your clients? Are they bringing it up?
I do think it's flying below the radar somewhat after listening to some of the stats that have come from Melissa and Dominique. I think it should become more of a discussion point. So I think as a broker, perhaps we could just be more alive to the types of settings, the type of property where this could be more likely to be exposure, like residential apartment buildings and some of the things that Melissa mentioned on with tradies. I hadn't even thought of that. So it's a really interesting topic. So the other point from a broker's standpoint is it'll probably behove us to have a knowledge of the common triggers or hazard indicators, because they seem to cluster into sort of 4 buckets. The first thing is for a broker to become more aware of where battery exposure could exist with your clients. That's the first thing. And then really there are 4 things after that. Be aware that these fires produce a sweet metallic or chemical smell. It indicates electrolyte decomposition. So that's a distinct odor, smell. The second thing is to understand they produce a very distinctive white to greyish smoke or vapor. So the second point is high velocity smoke. The next one is that just to be aware that a distressed battery typically produces also a characteristic sort of hissing, popping or crackling sound. So that's the third thing, a characteristic sound. And lastly, from a broker standpoint, you can, in your discussions with your clients, just be alive to the rapid and uneven heating on the battery surface. So just be aware of more battery heat. So when you have a look at these things, once you've identified the exposure, it's all about smell, smoke, sound, and heat. So like a bit of an acronym there. I think SHITE, smoke and heat in this exposure. We leave that with the audience.
So that's a great acronym. And the chemistry lesson was much appreciated. Dominique, let's end with you. You're arguably the most qualified to give a chemistry lesson on this. But I mean, are you seeing it becoming more of a discussion point? Should it be more of a discussion point, do you think?
Yeah, I think it's going to have to be. Certainly, I'm keeping an eye on it across the market, trying to identify, when you see a fire in the media, the question is always what was the cause of the fire, and looking at that frequency and increase of those. If we're seeing a consistent increasing in frequency and severity, and we're not seeing a change in risk behavior, risk management and regulation, then there are going to be premium increases to fund those increased frequency and severity losses. So I think, as I said, ideally, we'd be in a position where we'd have some regulation step in and some education for consumers to shift this, because I don't think it's an insurance solution that solves this problem, but certainly insurance remains here in the meantime.
Thank you very much, Dominique, and thanks to Melissa and Martin, and thanks for watching Insurance Business TV. Bye for now.